The Hilltop Glove podcast is sponsored by Mid-Carolina Service Company.
Mid-Carolina Service Company is the first name to search for your residential or commercial HVAC needs in Lexington and surrounding areas.
Just go holler at Jason and Clint. They'll hook you up on the air conditioners, on the restaurant equipment, refrigerators, refrigeration, ice machine repair. They've been doing this for years. I know them cats forever.
Family owned and operated since 2006, they pride themselves in their quality work and customer relationships. Call 803-356-4153 or visit midcarolinaserviceco.com for a no obligation quote for service today. This episode of Hilltop Glove Podcast is proudly sponsored by Your Dollar Store, located at 3017 Farrell Road in Columbia, South Carolina. Owned by Brian Thomas, Your Dollar Store has been serving the community since June 2021 with a mission to provide fresh produce and essential household items to neighborhoods in need, serving areas like Booker, Washington Heights, and other nearby locations affected by grocery store closures. Your Dollar Store is a convenient one-stop shop for those seeking healthier food options and affordable essentials. Support a local business that's dedicated to giving back. Your Dollar Store, where you can shop, chat, and leave with a smile.
The Hilltop Glove podcast is sponsored by True Brilliance Entertainment.
True Brilliance is a production, promotions, and management company dedicated to connecting artists and producers across the Carolinas to music industry professionals.
Several of their clients have placements both domestic and internationally as a result of their services.
Are you an artist or producer looking to build meaningful relationships within the music industry? Then True Brilliance is for you. Check them out at paramilitary.com. That's spelled P-A-I-R-A military.com.
Welcome to the Hilltop Glove podcast.
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 The Hilltop Glove Podcast.
Welcome back to the Hilltop Glove podcast. Today we have the special pleasure of speaking with Tamara Edwards. Tamara Edwards, founder of Financial Transformation and Financial Care Center Incorporated. With over 17 years of experience, Tamara focuses on community service, financial literacy, and business development. As a licensed credit counselor and certified personal finance coach, she empowers individuals to improve their financial futures. Her vision is to foster a society where everyone can achieve a healthy financial lifestyle. Though through free consultations, credit repair, and financial intelligence training, Tamara provides transformative programs that positively impact lives. Join us as we learn about managing credit for a prosperous future. How are you today?
Hey.
In the
I'm fine,
virtual
thank
world.
you. Yes, ma'am. So here's the thing. I know there's going to be a little bit of delay. So anytime we ask a question, we'll make sure there's a pause so that you can jump on it. And then likewise, we'll make sure that we're aware of that. Okay.
Okay.
So tell us a little bit about your upbringing. What was it like as a child? We like to give a little bit of history about, your childhood experiences so our community can get to know you a little bit more.
Okay. I came from a two-parent household. So it was just my brother and I, mom and dad. Dad worked for the government, so he often traveled a lot. My mother was a stay-at-home mom. I would say our childhood was very good. I think me and my brother both are entrepreneurs. Um, and I think my dad instilled very good work ethics in us. You got to work for what you want. And I always tell the story and did not even know that I kind of stumbled into this personal financial world. But when I was 16 and got my first job, and literally my job, I worked at Hardee's. and Hardee's was right across the highway from where I live, so I can walk home. And when I got my first paycheck and I walked outside happy to get my first paycheck, there's my dad. He's waiting on me, and I'm like, why is he here? And at that moment, he said, okay, it's your payday, right? And I'm like, yes, sir. Come on. He took me to a bank, opened up a checking and a savings account, and got me back home. And that's when he started teaching me about finances, how to always pay myself first. So he had this little trick that he would do when it was time for me to get paid and I have to put money in the back where I couldn't see it. So I tell individuals right then, you know, at 17, I was doing my taxes because my dad, he was very, very disciplined when it came to finance and saving, um, and having something for later.
Mm.
So I I owe it all to him, and I always say that. I said I owe it all to my dad, and I think that's what I just took for granted. And I thought everyone, dad or mom,
Mm.
sat them down
Mm.
at this age and taught them about finances.
And that's just not the case.
That's not.
That's not the case.
Man, that makes some sense. Do you have, how many siblings do you have?
It's just me and my brother.
Oh, wow.
I am the oldest, and my brother is 3 years younger. So it was just me and my brother in the household. And like I said, we both are entrepreneurs.
And so did he get the same type of financial education from your father that you received?
Oh, yes. Dad was very strict on that. And I say, yes, my dad was very, it's like he wanted to know, how much did you get paid? How much did you put aside? So that was always the question. And I had to give my mom $25 every week when I got paid, no excuses. And then he gave me a bill, right? He gave me a cable bill. And I think back, the cable bill was like back then $45.
Yeah.
Okay.
Wow.
So
Amazing.
I gave mom 25. The cable was like 45. And I could remember coming home one Friday and I said, Dad, can I just pay this cable bill later? I don't have enough money. And he goes, excuse me? You get paid every Friday, $45 once a month. And he really got on me for saying that. And he told me I should never. You're going to pay your bills, for your savings come first, and you're going to pay your bills, and you're going to pay your mom. So I knew that I had to pay myself first, and I better have $25 to pay my mom, and I better have $45 to pay the cable, because he was not playing that.
I like that
Mm.
discipline now.
So
Mm-hmm.
that was his discipline. And then another one, I must have went out, you're hanging out,
Yeah.
16, 17, and he comes in one Saturday, and my dad was, he was a hustler. I think that's where me and my brother got it from. Even though he worked for the government, he had his own cab business. So he always was working. And he got out for work and he said, young lady, I thought you were supposed to work today. I said, I called in. Now I called in to my boss, said I was sick. You know, this man made me go to work
After you called
after
out.
I called in.
Yo.
Yes, he said, honey, let me tell you something. If you better know, if you can't burn that candle at both ends, you better know what side to burn it on. You're going to get out of here.
That's true.
No such thing as calling in to work because you went to a party.
Bam. I'm with that.
That's
I'm
the
with it.
kind of dad
Mm-hmm.
we had.
Mm-hmm.
So at what age did you
Yes.
notice that your upbringing was different from your friends?
Yeah.
It wasn't until probably in my 20s. Like I said, I started at Hardee's at 16. By the time I was 20, I was a manager at Hardee's. So I was managing Hardee's.
Wow.
And me
Grown people?
being around grown people. Huh?
I said you were managing grown people
Yeah.
at 20.
Yeah.
Ooh.
Yeah.
Okay.
Yes. And they didn't like me. I had one lady told me she was going to get her daughter to come and broke my arm because she wasn't taking orders from a little girl.
Oh, wow. Wow.
But it was at that time with me going out and being around other friends, and I'm just hearing their upbringing. I'm seeing how they're utilizing their funds. And also, me doing the schedule, I would hear individuals, no, I don't want all of these hours because such and such is the case, meaning maybe their benefits will get cut off, or
Mm.
they had a lot of different reasons. So I was like, this is odd.
Mm-hmm.
Because me and my brother, as soon as we got a job, Dad sat us down and he talked to us about credit. Now, I would be lying to you if I said, even though I had that upbringing, that I did not make my own mistakes, because I did.
Good
I
point.
did make my own mistakes when it came to credit, and because I could get the credit, I kind of overloaded myself. And then at the time when my dad took me to get a new car, because we would always buy my car cash, and that's the time when he realized, what is this? I was making all of the payments, but he's wondering, how are you maintaining all of these credit cards that you have? He took them all from me, cut it up, sat me down. We had to come up with a plan on how I was going to pay all of these credit cards off.
Wow. But it's great
That
to
was
get it
something else.
done,
Yeah.
as opposed to having to learn that lesson down the road once it really affects your ability to build a family and maintain a proper lifestyle.
Yes.
Hmm.
Yes.
So going into credit, can you name some like financial skills that the average person is lacking when it comes to knowing about credit and how to build credit?
One that I found is budgeting and expenses. And when I deal with individuals that come, I want my credit fixed. I want y'all to think about this question. Is the credit really broken? Or you just don't understand what you're doing?
That part.
So is the individual the one that's broke, that needs to be fixed?
Mm-hmm. Mm-hmm. Mm-hmm.
So I always say, okay, let's look at your budget. Let's look at your spending habits, because once we get our budget and our spending in order, you're going to start paying your bills on time. And that's basically how our credit gets messed up, because we take on too much debt because we don't understand debt management.
Yeah.
And then we're not budgeting and tracking our expenses. And you have some individuals my age and older that probably never saw their credit report, but they got turned down for something and they said, I got bad credit, or I need my credit fixed. And then I have to educate them. Let's look at it. You got nothing but late payments. Can a credit repair person really fix late payments? They might could get rid of the late payments, one or two, but what's going to happen if you don't have debt management skills?
Mm-hmm. It's going to happen again.
Happen again.
It's going to happen again. So first we need to create a budget and track our expenses.
And how detailed would the budget be? Would it be like a weekly budget, daily budget, monthly?
I would first start off as a monthly budget. So when clients come into me, I first want to do a financial assessment. That is simple as you bringing in 90 days of your bank statements, and we doing what I call the highlighting game. We're going to sit there and we're going to tear that bank statement apart. I tell individuals I could tell a lot about
Line by
you
line.
if I see your bank statements.
Yeah, it tell on you.
Okay,
It tell on you.
it's going to tell.
You were here.
It's going to tell a story.
Here.
All these stores eating all this food,
And
getting all this cash out the ATM.
right? Cash App. And you're going to tell me that you can't save $25 a month. I'm just going to say that.
Yeah.
You can't save. I don't have it, Miss Rivers. I can't save. But when I go through your bank statement, I'm noticing that you're spending an extra $500.
Ow. Ow.
We find the money. We're
Yeah.
going to find the money.
Yep. It's the accountability though too, like the education with accountability and tools. And that's what you're talking about, like putting all that together to allow for somebody to take control again over their finances.
Yes, yes. And I think coming up, you can't you can't fix what you don't understand.
Mm-hmm.
So some people just shy away from it. I'm not going to look at my credit. I'm not going to deal with the creditors that call because they don't understand. They don't know how to go through that process. So we kind of bury our head in the sand. And that's the same. I spent 5 years. My degree is in business and legal studies. I originally wanted to go in the legal field.
Oh, wow.
Okay.
Wow.
And during '08, if you could remember, we had the mortgage bubble burst. So I worked for a foreclosure law firm at that time. This is how I really got into this. I worked for that foreclosure law firm, and the bulk of the clients, I'm not going to say all, the bulk of the clients looked like you and me. They signed a mortgage. They did not understand what they signed.
Nope.
And they were getting foreclosed on, some prematurely because they buried their head in the sand because they didn't understand it. So what they did, they threw the summons and complaint to the side. And now when it's time for foreclosure, they're looking for help when they could have looked for help earlier. Or if they had just read the summons and complaint, their homes could have been saved. So
Yeah.
South Carolina was awarded, I forgot how many dollars to save individuals from foreclosure. At the time, there was they call it administrative order that came down to put foreclosures on hold because they believed that the banks were foreclosing prematurely. They wasn't doing what they said was in the summons and complaint. This is how I know I'm on the right track because I know this was all God's work. I got laid off from I didn't like that firm. I hated that job. I would literally go to my car and cry. I would have people call me and be crying because they were about to be put on the street. And I wanted to tell them, you're not answering the complaint. You're writing this letter and all we're doing is putting it in as a response. I was in charge of getting people served.
Oh,
Okay.
wow.
And they would invade service. So you think that you're prolonging the case because you're hiding from the process server. Well, little do you know, I would run you in the paper, your name, your home in the paper for 8 weeks. And after that, you are served. They didn't understand that. And I'm like, how do I help them? Well, I got laid off from the law firm because it was a bunch of paralegals. Happened so I got employed with a nonprofit heading up a foreclosure task force, and we served the state of South Carolina. And through that, I saved over 2,000 homes from foreclosure only because I educate individuals.
Wow.
I made them understand their rights. Quit digging your head in the sand. And sometimes there's options that you don't know about, but you got to call and ask.
I think that's very important.
And when So when I started working with them, then I started realizing, okay, where's your deed? They didn't know what a deed was. Where's your mortgage? Because I had to collect all of these docs to send to get the money. So I was putting files together to get the state to pay. We could get up to $36,000 to save their homes. And some individuals, some seniors, I was paying off their homes. because they had signed a mortgage with a balloon payment. So that means they thought they were paying off their mortgage. They were down to their last year, but that last payment was $15,000 or $20,000, some
What?
$30,000,
Yeah.
and they were losing their homes. So as I'm talking to these clients, I realized they really didn't understand what they were doing.
Nope.
They were so happy they could buy a house.
Mm-hmm.
And that's where the education part kicked in with me, through that foreclosure. So after I had clients that trusted me, and they're like, Miss Rivers, you saved my home. Now I need to get my finances back on track. Can you help me? And that's what started me on this road of personal financial coach, by my foreclosure clients.
Wow.
That was like my first job out of college, and I became, back then they call it housing counselors.
Mm-hmm.
Now today they call it personal financial coaches.
Mm.
And that's when I said I gotta educate these individuals.
And that's where it is, man. I mean, they always speak about this, but people are going to die for the lack of understanding,
Yeah.
lack of knowledge, not knowing what it is that you're out there dealing with. And like you said, it's really simple, actually. And I think in our community, it's something that we're really bad about is we hide from the bill collector. We avoid the doctor, like hearing bad news, getting bad news, and just like sitting there, like I said, just simply reading the summons and seeing what was given to you, you would see what your options are, and that you don't. There's not going to be a situation that's going to be as negative as you think it is, but that fear keeps you from reaching that
That
potential.
fear.
Yeah,
And also, like you said, calling the people, the number that's on the paper, and asking, are there any potential other options?
yeah,
You know,
yeah.
that should be
Mhm.
something easy to do, but a lot of
Hmm.
people shy away from that as well.
Hmm.
So, Fit Academy, financial intelligence training. That's my first week. It's an 8 weeks training. And that's why I had to do research on the psychological factors of how all of us spend our money.
Mm.
And some of it stems from early childhood. I could look at my childhood. We always talk about our finances. You know, we always needed to make sure we had our stuff in order. Not everybody had that. But when I look at individuals and I coach individuals, a lot of our spending habits come from our first relationship with money.
Mm-hmm.
A lot of households, they don't talk about their finances.
Mm-mm.
That's a topic that we don't talk about it. We just try to get through.
Yeah.
Ooh, that's survival mentality. Hmm.
Instead of
Right.
thriving.
Yep.
Exactly.
So, how would you
Exactly.
encourage more families to talk about financial literacy to their kids or to other family members?
You could start off with teaching your kids about financial literacy, and you wouldn't even think making up a game with chores.
Mhm.
I have 3 boys, and then I have a curriculum for ages 5 and up with financial literacy. And someone said, how am I going to teach a 5-year-old? First, we need to teach that 5-year-old the difference between needs and wants,
Mhm.
Mm.
Because they
right?
don't know how to decipher.
So now you're going to teach your kids, is this a need or is this a want? And giving them chores around the house. Okay, you're getting paid for this. You have $25. And now you're going to make a little budget game. You're going to create a little budget game with your 5-year-old or your 6-year-old, and make it fun for them. The whole time you're teaching them the importance of money.
Mhm. And supply and demand.
Oh, you ain't lying.
Right.
Because they won't understand the
There you go.
Yeah.
Yeah. Yeah.
Yeah. So, you could teach them as early as 5 years old.
That is
Five
important.
years old.
That's so important.
Um,
That's very important. And I just want to
mhm.
interject and say this. If you put that on your child at a young age and you trust that they'll learn it, they will learn that, hey, this is something that is normal. And then once that behavior becomes normalized as they get older, like you said, you just set up a foundation for them to be able to receive the more technical information without being afraid of it. Again, you took the fear out of finances for them.
Mm-hmm. Mm-hmm. And I think that's, I thought it was normal that everybody, parents sat down and talked to them about finances.
Yeah.
I thought it was normal for, you got to pay your bills on time. You got to maintain your credit. You got to put something away.
Mm-hmm.
It's normal till it's not, I guess. If I could say that, because it's
Right. It's normal
it's,
till it's not.
Right.
you know, but then I had to, again, the psychological factors, you have to break that down first. There is such thing as financial trauma.
Mm-hmm. Yep.
And what would you think a financial trauma would be? I could tell you, one of my clients, she has money in the bank, she makes good money, but she will never pay her bills on time. She will wait for the last minute to pay. And I had to sit down. I said, okay, we got to figure out what is the root problem, because you have the money. You're telling me you want to purchase a home, but we can't move forward until we start paying our bills on time.
Mm-hmm.
And at that time, she shared with me that in her mind, she couldn't let her bank account go under a certain amount,
Mm-hmm.
because she was afraid that her kids would come home and ask for something and she couldn't provide, because as a child, her parents always said they didn't have.
Yeah.
They didn't have the money for this. They didn't have the money for that. And she told herself if she ever had kids, she would not do her kids the way her parents did. So in her head, she had to keep a certain amount. And she thought that was healthy.
Yeah.
She would spend her money because she had 8 siblings. It was 9 of them, and she always had hand-me-downs. Never new pair of shoes. She would buy 4 and 5 pair of shoes every payday.
Oh, that's trauma.
So she was running her account and
Dry.
trauma.
Yeah.
So what about the people that have the money but they hold it? They don't circulate the money. They just let it sit in their account.
That's where they need some deeper financial planning.
Okay.
You know, money is supposed to be in a movement, like you said, circulating. I tell people, money is not supposed to be still. You know, you gotta try to invest your money, and that's where you need to get a financial advisor, the financial investor, those advisors, to start moving your money around. Most of us allow our money to work us instead of us work our money. We should be telling our money where to go. Our money should be working for us, not us working for the money. So learning to plan your taxes efficiently, learning about investments. So many people, they have 401k and they have matching 401k and would not invest. So if I was to give you $5 right now and I said I'm going to match, and that means you're going to get $10 each time you put, and you're not taking free money.
Yeah, it's painful. That's painful.
Because they don't understand how it works. So that's what we have to do. You know, you need to be looking at investments. You need to be looking at CDs. Definitely, if your job have any type of 401k plans, you need to be investing your, especially if they match.
Yeah.
I didn't even know that.
Yeah. I hurt mine. That'd be all. That's part of the reason why I walk around broke, because I put my money in there because I don't need it right now. I'll get it later. And then, speaking about that, because you're right on this topic, and we're talking about spending wisely. Could you speak about the importance of health? I mean, not health insurance, life insurance, especially for younger folk. We don't think about it because we're like, it's something that we have. If our employer offers it, we'll take it. But could you explain why it's so important, especially for our elders out there who may have not had the chance to invest in that? You do have the family members that take care of them, et cetera. And I'm like, we should all still have life insurance, even if you don't, even if it's not something that comes with employment, we should invest into it.
So it's life insurance and it's burial insurance.
Mm.
Life insurance is just what it says. Life insurance is for the living.
Mm-hmm. Mm-hmm.
So you're getting life insurance. You're making sure that your children, your wife, your parents don't have that financial burden. One, to bury you, and two, let's say you're married. Your life insurance should be 3 times the salary.
Mm-hmm.
The
Mm-hmm. At your
at
current
your
position.
Because
okay.
yeah, yeah. So if something happens to that individual, that income is gone, you want to make sure that your children and your spouse is taken care of. You want to make sure that your family is taken care of.
Yep, I agree to that. And there was a an individual on the podcast. They were talking about this, and they were breaking down how a life insurance plan is like a step up, because everybody's gonna pass away eventually. I hate to say it, ain't nobody beat Methuselah yet. And until we get to that until we get to that point, you might as well go ahead and prepare for that time when it comes. And if you have a life insurance plan, you're basically making sure that the generation that comes after you, if you aren't already where you want to be, it's going to help them get to that place, especially if you start financially advising them properly, or getting them an advisor and planning properly and making sure that you're educating them on what to do with money and how to use money. When that money comes to them, that will change the generation there and afterwards. And if they're doing those same things, they'll keep rolling over.
Absolutely.
Our community doesn't do that a lot. And there was this weird, I guess it's a weird analogy. Well, not analogy, but reason why we should use it. If there's a large portion of our community that has life insurance plans, there's a lot of groups and communities that would be very remiss to bother or cause us harm or hurt, because those insurance companies
Yeah.
would be on the table. They'd be on the books to have to then make sure financially they're blessing that community. And they don't want to do that. And they would
Yes.
rather not to have to use that.
Mhm.
So in our communities, when somebody's 17 years old to say to 45 gets shot, or something happens, or say something violent happens, somebody dies, or say car accident, etc., most of the times there's nothing that comes of it. It's
Mhm.
just that's the end of everything. But having life insurance is a really good thing to, first of all, guard, to assist the folks who are going to have to live after that person has passed away. But also groups or individuals that aren't a part of the communities, it's going to make it less likely that they're going to want to infringe on your life in your pursuit of happiness. Because
Right.
why would I do that? Why would I cause? Because then I'm literally just making sure that you're doing better than what you were doing before. I'm trying to say it in certain terms to not talk about certain other things
Yeah.
alongside it, but
Yeah.
in generalities, it is a very protective measure within our community to make sure that our community is able to be safe and pursue the goals that we want to.
But can you talk about,
Yeah. That is.
I guess, how people
Go ahead.
take money from their life insurance
Oh, that's a good
and
point.
invest it, or use it to pay back?
I didn't hear the question.
Can you talk about how people who have a life insurance policy, how they're able to pull money from their life insurance policy to either invest it or start a business or pay back money or a credit that they may owe?
Y- Yeah, there's certain types of life insurance definitely that could build cash value,
Mhm.
and some could take from that, and they could definitely I forgot the name of it.
So it's either like whole
The
life or
you
term.
I think it's
The
whole.
two
Yeah,
different.
yeah,
The
yeah.
two different.
So it's two different ones. The whole life, the term is what you hear a lot of, like, what's the guy name? I know Susie. She says get term, but term, let's say I got term at 19. Term is only for a term. It's only good for 20 years. So after 20 years, I have
Yeah,
to go get more
that's
insurance.
true. Yeah.
So you really, the key is if you start off younger, because what happens is individual will wait till they 50, 60 and want to get life insurance. And now the price has doubled.
Going up because you're
Not
a
only has it
liability.
doubled,
You're a liability.
because you're a liability. You wait, you wait till you got high blood pressure,
Yep.
diabetes, and but if you got it when you were in your 20s and you get a whole life with growing cash value, imagine how much funds you're going to have right now.
Yeah.
And you could possibly take some funds from that and, like you said, start your business, start another investment.
Hmm.
But we don't look at those. So there are different ways that we can think outside of the box to be financially stable.
Hmm.
And again, allow our money to work for us instead of the money we working for the money.
Hmm. And I want to interject and say this. I think some of it, and you can either agree or disagree, just let me know what you feel about this. I think part of it has to do with the patience that is required to allow for money to do its work.
Yeah.
I totally agree.
Hmm.
I totally agree. I don't know. Um, I'm gonna say this lightly because I don't know the age group, but typically right now we're living in a generation of microwave. Everybody want this quick turnaround. Everybody want this quick success, and that's just not how things work.
Nope.
It takes time to build.
Hmm.
So I do agree. They want things like right now. So they get impatient and then forget it.
And
I'm
they
not
give
going to
up.
do this,
They
or
give up.
it's not working.
Hmm.
Yeah.
And I think that's one of the things, if we could figure out within our community a way to make it, I don't know, hip, cool, chic, whatever it is, to have financial patience alongside the other things, I think it would be good. And I know with social media and the speed of media nowadays, like how quick you can see things, how quickly things move. You're looking at Instagram, TikTok, or Facebook, and all you see are all the financial trappings of success, and you think stuff is coming like that overnight, but because they never show you the back, we don't know how the sausage is made. And when you don't you don't get to see that, you don't know they putting this spice in there, that meat's getting ground, a little hoof go in there, or whatever it is, right? You don't get to see that. And so at the end of the day, you're like, well, they just had this beautiful package. It must have just happened quickly, not realizing this is probably a 15-year process. You're seeing the last 3 months that they've been experiencing the success or the products of their labor. And I don't think that
Hmm.
reality is coached enough to our community.
Absolutely correct.
Mhm.
I agree with you 100% on that.
So
Go
can
ahead.
you? I know some people get mad about us having credit, even having credit here. So can you explain the importance of it?
So, in the United States, um, we are built on consumer spending and credit. So having no credit right now is like having bad credit.
Thank you.
Um, because You need credit, of course, to buy a home. You need credit, of course, to buy a car. You need credit to rent an apartment. You need credit to even get a car insurance. Um, so it's very important to teach and start building credit at a young age. Now, you can take your 14-year-old and add them on as an authorized user. Don't give them the card, but add them on as an authorized user at 14,
Yes, ma'am.
just so you can start. And they do it in other communities.
Thank you.
Mhm.
Yes, ma'am.
They
Yes.
kids come out of college with 700 credit scores and don't even know it
Mm-mm.
because their parents add them on 2 or 3 credit cards.
Mm. Okay, so multiple.
So it's very important. And I heard someone say, I don't need credit. I'm just going to buy everything cash. Okay. Eventually, you're going to need it.
Yep.
That'll be good if you could go and buy everything cash. But we have this, that's how the United States is built. We have this credit rating that they have attached everybody to.
Mm-hmm.
And I tell individuals, you got 49 different versions of your credit score out there. It's 49 different versions.
No, you don't. Stop it. Really?
I didn't know
That is
that.
horrible. 49?
So you ever heard, well, I've heard people, well, I went to the lender and I saw on Credit Karma, my credit score was
Don't trust it.
680.
Don't trust it.
But when I went to the lender, it was actually 5 something.
Mhm.
Or I saw my credit score on my bank account and it said it was this. Well, you have a score for each industry and what you are applying for.
Oh, wow.
If you are
That's
applying
right.
for a mortgage,
Yeah, man.
there is mortgage scores. So you have 3 set of scores for the mortgage. If you're applying for a car, there are automobile scores.
Mhm.
And they are different from your mortgage scores. They all different.
Mhm.
Even insurance company. You get car insurance, they'll send you your score for your car insurance score. You have banking industry scores. So I always tell them, what is the goal at hand? What are you trying to do? Because we got to make sure that we're looking at the right score and we're working on the right scores. Because if you want to buy a house, we don't need to be looking at automobile scores.
Right.
True.
So there's several different versions. FICO has 10 different models. You have FICO 1 on up to 10. You have Advantage that has their own model.
Mhm.
And it's very easy to get confused. And I'm like, Credit Karma is not wrong. Credit Karma is just on a different model.
Yeah.
Okay.
It's an Advantage model.
They use 3 different scores to get I guess a median level that you're looking at, and it lets you know. It lets you know. She's so right. I didn't know that there was everything. FICO 8. I said, "What's FICO 8?"
Yeah.
So that means there's 1, 2, 3, 4, 5, 6, 7.
Yes.
So talk
Wild.
about,
Yes.
I
Yes.
guess
And
people
when you
running your credit, like, does that damage your possibility of being approved?
if you so the only time it hits your credit hard is when you are going and asking for credit. So that's what's called a hard hit. So you went into a bank, you're applying for a loan, you're shopping for a car, you're asking for credit. Now, if you request your own credit score, it's not a hit.
Okay.
That's good to know.
Yeah.
That's
So
really
that
good to know.
wouldn't damage your credit.
Okay.
So they don't penalize you
Because
for getting your own information.
right.
Okay.
But it is a hit if you was to go to Bank of America and request a loan, Navy Federal and request a loan, Wells Fargo and request a loan.
Eee.
That's a hard hit because you're going in there and you're asking for credit. Now, I will say this, as a consumer, you have the right to shop rate. So if, let's say for instance, you're shopping for a car and you go to 3 different places, that will and within a 14-day window, that's just going to count as one hit because you have the right to shop rate.
Shop rate.
Oh, okay.
And same thing as a mortgage.
Oh, okay.
So as long as you're doing it within a
Mhm.
specific time span, and is it usually 14 days?
It's usually 14 days within the 14-day window.
Okay.
Some may say now, I heard they may give you 30 days. But I know for a fact it's 14 days because when I help individuals apply for a mortgage, I'm like, okay, we're going to apply at 3 different entities
Mm-hmm.
because we want to make sure. How do we know that Wells Fargo is giving us the best deal? We have
Right.
nothing to compare it to.
Right.
Yep. Yep.
So we want to get 3, and we want to make sure that we're looking at apples to apples and not apples to orange or bananas. And we want to make sure that we're getting a good rate. So having a good credit score saves you money when you want to borrow money.
That's a
So I used to use this slogan like, "Hey, I'm going to teach you how to keep the money in your pocket because if you get that 700 and up and now the credit score goes to like 850 and above now, um you got a paper, you just go sign your name, but it's going to cost you less to borrow money if you have a high credit score."
wow.
Hmm.
That makes sense because you're trusting. I trust you now
Trustworthy.
to
Yeah.
pay,
You're
make
trustworthy.
your payments.
Yeah.
So, what kind of advice would you give a
So,
millennial coming out of college if they didn't have it already set up?
I would tell them, I really would like individuals to start building credit early. Um,
Before they there.
so when you're getting out of college, I would say, first get your credit report, and you really need to get with someone if and learn what's on your credit. You have to learn your credit profile. Because what may work for mom and dad may not work for you because everybody has their own unique credit profile.
Hmm.
2, I would advise them to get one of each because you want to have a healthy mix of credit. Some individuals they have bad credit because they lack a healthy mix. Well, what is that? That's revolving and installment accounts. You need to have a mixture of the 2 different accounts. So revolving is simply your credit cards. Your installments is like your automobile loan, um, any low installment loan. And when I tell individuals you need an installment loan, they want to run quick to the world finances.
No.
That is the quickest. Oh, don't do it. That is the quickest way to tank your score. And they're wondering, well, I had to build credit, but I have 5 finance company and my scores, I'm paying them every month on time, but my score is still 500. They're not going to award you for going to the finance company. The finance company is for subprime credit scores. And that means, individuals with poor credit
Mm-hmm.
goes to the finance company.
Mm-hmm.
So you could go to the finance company and your score may jump 5, but if you get a credit card and you keep your credit card under 30% of the limit, you will see your score jump 40 points in the first month.
Mm. Yeah, talk about that.
And why is that?
Yeah.
Why is that? Because installment loans is term loans. So I said, okay, you got this loan from me. Your payment is $100 a month for the next 12 months. That's kind of easy, right?
Yeah.
Would you think if I gave you a loan, I'm gonna pay you $100 each month.
Mm.
Now, with a revolving, it takes a little bit more discipline. So I'm gonna reward you a little bit more because revolving, I'm gonna give you a $500 credit card. But they don't tell you they only want you to spend 30% because I'm going to reward you. If you could keep that card under 30% of that 500,
Hmm.
which is 150, that's where you're going to start seeing your credit go up. Because, this
That's
person
the game.
have a
That is the game.
500, and so it takes a little bit more discipline.
Yeah.
So I'm going to reward you. I'm going to give you more points for that. So I would say get 2 revolving accounts. That's the quickest way to build your credit. And make sure that you keep it under 30% of whatever that limit is. Easy math, if you got $200 credit card times 0.30, whatever that gives you, which is going to come out to 60, that means don't spend over $60, especially in the first year of you starting to use credit.
And talk about
And
payments
watch
too.
how you're
How paying, I guess, before it helps increase it.
Yes, you want to pay. Some of them say the trick is to pay before the statement day would help. Um, but how you're going to save on interest? So you use the credit card and you're trying to pay, make 2 payments instead of 1. And what I mean by that, if the payment is $100, I'm going to make $50 this week and $100 before the due date or
Well,
on the due date, and I'm cutting that interest
in half.
Yeah.
Okay.
You're cutting it because you're paying it.
You paying
You're cutting it.
extra. Okay.
Yeah. Yeah.
Man, that is dope. Man, well, I will say this because I know we have to wrap up, but we're gonna have to have you back on.
Yeah. This is a
I
good
got some more
conversation.
questions. Some more questions.
And let me tell you, y'all really made me feel comfortable here.
I
Look
told
at that.
you not to be nervous. We're really
Yeah,
chill.
and then the next time we're in Charleston, we like to have you coming
Yeah.
in person, so we can do that studio down there. It just, I mean, because wealth of knowledge, and like you said, when you're raised and you don't have the information or the education directly, you got to get it from somewhere, and each one teach one, especially in our community. Come on,
Gotcha.
let's do it. So we definitely will have to have you back. Before we do get off, though, if you could please share with our audience where they can find you, where they can get in contact with you, and how they could utilize your services.
Yes. So they could look me up on my website. My website is www.financialsc.us. They could go on there and book an appointment. I am also on Facebook under the financial transformation. So if they look at the financial transformation, they can find me there.
Awesome.
I also want to mention for those that are in the Charleston area, I am having my 3rd cohort classes, the Fit Academy, which is an 8 weeks training, starting from financial psychology and ending with career planning. That's an 8 weeks course, and we will start on May 1st through the 22nd. The classes is just $25 a week.
Wow.
Wow.
That's affordable.
That's a 20 Yes, yes, that is through my nonprofit because I want individuals to get that. Plus, they will get 2 free sessions with me if they take all 8 classes. And I have some very special and unique individuals coming to teach about risk management when it comes to insurance, because I want to make sure everyone has adequate insurance. That's going to be in the class, teaching them about credit, teaching them about account management, teaching them how to monetize off of the skills that they have, because sometimes, we can only cut but so much from our budget.
Right.
So that means now it's time for us to grow from where we
And
are.
leverage
How do we
our skills.
bring in more money and leverage our skills to do that?
Yeah.
Awesome.
So if you're ever in Charleston, if your listeners are ever in Charleston, my office is located in the Opportunity Center. That's 8570 Rivers Avenue. I am in Suite 100. You could stop by and see me, and that's also where the classes will be.
Awesome.
Perfect. Thank
Awesome.
you.
Well, we want to thank you so much for joining us today on the Hilltop Club podcast. I'm DJ and what?
Tamaya.
Mike. Skip.
And our esteemed guest, Miss Tamara
Rivers.
We appreciate. Oh wait, we're missing
Edwards.
Edwards. I was about to say. I know I was missing something. We
No, I got Rivers. It's Rivers-Edwards. That's fine.
okay. And we want to thank you for joining us today. It's been a very insightful conversation. There's lots to pick from this. I know when we do the snippets and stuff from, it's going to be a lot of information that our audience will learn from and be edified by. But we will have to have a part 2 of this conversation. So we will reach out to you to make sure we can do that in person
I
in
would love
Charleston.
it.
But like I always tell folks, make sure you tell somebody next to them that you love them, that you appreciate them, and you cherish them. And until the next episode, peace.
The Hilltop Girl Podcast.